Good evening, everybody. Hope everybody had a nice holiday weekend. It was typical 4th of July here in Pittsburgh. Getting a private message about the lake. I'll try to incorporate the question is what major insight do we get if we come to the lake? And I guess the simplest way to state it is it all comes together to the point where you can analyze what the overall market trend is, what the sector trend is, what the best stocks are in that sector. You can start putting all the probabilities in your favor. Your probabilities of consistently producing profits in a portfolio just improve dramatically. So the reason I put it together, obviously, through the years, I've always said that I was the worst investor in the world. And everything that I set up was to take my own emotions out of my trading. And when you do that and you just start working off a mechanical basis, you'd be surprised how fast you start analyzing things that is going to make you a profit versus hearing things or investing in something because of a rumor or because of an analyst upgrading or downgrading. It's you get much more solid feel for what's going on in your own investing, knowing what to expect. So as we could see today, we're kind of in the summer doldrums. We're still in a slow uptrend as long as we stay above the T-line. That was the Dow. This is the NASDAQ. And so this is the very relevant factor. When you start getting junky trading day to day, the underlying trend indicator is the T-line, telling you which way the overall trend is or whether there's been a reversal or not. Excuse me. So right now, I'm guessing we're in the summer doldrums, and that is evidenced by the fact that today, if you saw what happened in the Dow, let's make this bigger. The Dow opened down about 120, about 100 points. It went down and came back up, and it just hovered at down about 125 all day long. I notice your stochastics are in the bottom third, and mine set at the same have been to the top. Now they're going down, but still in the top third. That's significant. What you have to make sure of is that you're doing the stochastics based upon the chart. I say this because a lot of times I set up my stochastics and it was based upon something else on the chart other than the chart itself. So one of the advantages of having a chat room is if you think your stochastics are out of whack, you can just say, in the chat room, just say, my stochastics are at 50. What's everybody else's? So if they say, well, no, ours is at, everybody else is saying it's 25 or 80 or something, at least you know that got something wrong in your stochastic setup. Crude oil, pretty much moving sideways right now, but Well. Looks like it had a hard time getting up through the 200 and the 50. But now it's leveling off. Closer to the mic, all right? Sorry about that. Okay, let's pick out something that everybody can bring up on their charts. There's Amazon, that we'll get back to. This is what the stochastics look like. So your stochastics are overbought. Well, let me make sure. Let's do this. You're absolutely right. Stochastics over on this chart is up here. All right. So I've got something goofed up. So I'm the one that's goofed up. So I have to come back here, say modify stochastics. Oh, huh. Don't know what that is. Yep. I'm glad you pointed that out. I don't know whether I can do this quick enough. Okay, add study. Ah, now I might be adding the stochastics to the stochastic. It's going to take too long. So I have to come back to it. All right. Slow stochastics. Yep. Oh, now I've lost the stochastics. Isn't that great? Well, now I'm goofing everything up. Yeah, there's something. Okay, I'm going to remove. Remove. Okay, close. Now, I'm going to add. I didn't know Peter still put out comments. Thank you, Terry. Okay. That looks better. There we go. All right. So that only took 10 minutes of time. All right. Let's take a look at what we were we are looking at today. We were going to buy new because of the fry pan bottom about ready to break out. This is exactly why it's always good to see confirmation. I'd rather be a day late buying on the confirmation than buy here and then have something like this happen. That was on new. The other ones that we recommended today was Roku because of the obvious pattern setup, which is the doji sandwich. And what was the confirmation of this doji sandwich? First of all, the signal itself. Secondly, that it closed up above the key line. That told us if they open this positive today, we wanted to be buying. And here's our projected target. So when we know that the projected target is up in this range or even up into this range, that gives you a good prospect for putting on different strategies that, not knowing exactly or not being able to calculate where your upside potential is based upon the visuals of candlesticks, you get a lot more opportunity to maybe put on spreads that become extremely profitable and very high probability. So we were putting on the 98.50, selling the 90 or 102.50 for $1.43. But if it went up above 102.50 or closed above 102.50, that $1.43 would go to $4. Now we're looking at the 105, selling the 110s for 177. Because if it comes up right to this level over the next 2 or 3 weeks or less, your $1.77 goes to $5. Again, reasonable rate of return. So the leverage you get out of the spreads are that you have less money exposed. You don't have to move as far to make a big profit, and your break even is much lower. Okay, the other one was QD, based upon the same thing. There was a doji sandwich. Now you can pretty much calculate visually. There's the base of your trend. There's the top of your trend. So there's your next target. You can pretty much estimate or calculate on a lot of charts that moving up here is going to give you about a 15 to 20% upside potential. So some of the other ones that we're going to kind of just go through these real quick of why we're in them. You can see why we're in KTOS, fry pan bottom breakout, and how long do we stay in this one? As long as it doesn't close back below the T line. This one, this is why being able to analyze when the breakout occurs and how long do you stay in it. Well, here you got a 50% we've got a 50% profit on this, buying it around the 1470 area. Now we're at the 21, pretty close to the $21 area. So this doesn't take a lot of analysis once it broke out. You just stay long as long as it as long as it stays above the T line. So the steady eddies become very simple to analyze. There's our best friend, fry pan bottom on Crocs. There's our first potential target, and we just stay long as it stays above the T line. I've had some more of the steady eddies, but I've stuck the gold stocks in here. Same scenario. Right here would have been a day you might have closed out the position, other than the fact that it closed back up at the high end of the trading range. Made it very simple. If it opened lower the next day, you close out the position. The fact that they gapped it right back up above the T-line kept you in this trade, or kept us in this trade. Same scenario on Newmont Mining. As long as it stays above the T-line, we can stay with it. CVM, you can see what's setting up. There's your wedge breakout right in this area. And if we make this smaller, you can see what type of pattern it's coming out of. Fry pan bottom, J-hook. If this starts breaking to the upside, you know you've got a wave 1, wave 3. And just from the basis of knowing what pattern set up and what happens to human nature, if this breaks out, we already know what the high probability result of a classic pattern is. Going into a wave 3, same as wave 1. Yeti, you can see this is a nice bobble breakout. This is why we buy aggressively right in here, because the probabilities just make it so strong that wave 1 and wave 3 is going to be the same level. Ocular, when it broke out, notice what it did today. It sold off hard for a while, but didn't almost use the T-line as a support area again. And SPWR, J-hook pattern, and notice the pullback, indecision, indecision, indecision. Then kind of a bullish flutter kicker. Wave 1, wave 3 in progress. And how long do you hang on to this one? You see a sell signal, and then see a sell signal and a close below the T-line. ESV, you can see the fry pan bottom setup. So this just gives you a format to tell you, all right, what do we look for? Well, we look for to see what happens here at the 50, and we know that it needs to stay above the T-line. With those simple parameters, you're going to stay in high probability trade setups. Fry pan bottom breakout. Saber. J-hook pattern. You can still be buying this one on strength. A few of the other ones. The ones that now have a little bit of doubt is DK. If this opens lower, you know that this trend is over. This one, if you're long, has to open positive and trade positive to stay in it. So again, all this is just very simple if-then logic. Knowing what should happen based upon the T-line and our patterns. RVNC. Looks like a fry pan bottom classic type pattern. But with it closing here, what can we analyze as far as investor sentiment? If it opens lower, we don't have a J-hook pattern set up. We've got a sideways move, close out the position. An XON, kind of the same scenario. Looks like it was trying to come back up and do a bobble breakout. Getting closer to the oversold area. But if this closes below the T-line, you close it out. Same thing that we were kind of expressing today on MLNT. With it closing below the T-line, after a bearish Harami failure at the 200, that was a good indication that you should have been closing out at least half the position. If you held on to it, now you only have one piece of criteria that you need to see to stay in it. And that is it has to open positive and trade positive. MAXR. There's your fry pan bottom breakout. So how long do you hold on to this one? As long as it doesn't close back below the T-line. All right, some of the biggies. Facebook, still trying to stay up in a wave 3. Notice where the low was today, right smack dab on the T line. And Chipotle, this is why knowing what individual signals tell you, which enhances your analysis of the chart pattern. Bullish engulfing. Now notice what's happened over the last 3 days. There's your 3 white soldiers. 3 white soldiers is a bullish candle. Next day they open it slightly lower, take it back up. Next day they open it back into the previous candle and take it up. That pretty much tells you some profit taking is occurring along the way, but the buying is still there. Pretty much enhances the reality that once they take their profits on the open, the buyers step right back in. No. See, remember, the underlying stock is the reason you bought the options. It was just a specific method to buy the stock. So you're not buying the options. You're buying the stock and you're using options to put yourself into that position. So what next for the 3 white soldiers is a bullish confirmation that the bulls are taking control. So now what do you have? Wave 1, wave 2, broke out into wave 3. Now, there are 50 or 60 candlestick signals in the candlestick universe. We've kind of cultivated down to the 12 major signals where you're going to see, you could put it either by the calls or a call spread, yes. So my recommendation always has been you learn the 12 major signals very well. But about once every couple of months you go back through the book and look at the other signals. Not so that you have to learn them, but just so that you recognize a signal when you see it. So if you didn't know this was 3 white soldiers, but you'd gone through and reviewed and said, yeah, this looks like a signal, now you can go back and browse through the rest of the signals and see which one it is. Tesla. Notice the pullback right to the T-line. But you're still above the T-line. If this opened positive tomorrow, and you were trading aggressively, you'd start buying immediately. Because you were watching what was happening for the prior 3 days. Same scenario on NVIDIA. Kind of your bearish belt hold. Now again, the difference between a belt hold and a message is a message usually closes well above the trading range. A belt hold comes right back into the trading range. Telling you there's different strength or weakness as far as the investor sentiment. So when you see that there's pulling back, you can find the 12 patterns on the website. Yes. Ed, you just go to our website, go to products and services, and the book is available there. The book is available there at a much lower price than Amazon and other places. But notice how the pullback is very indecisive, right to the 50. If they open this positive, where do you think your next target's going to be? Back up here to the 200. Netflix, this is what makes the trading soggy. It's got a nice uptrend, but it's hard to trade because it's kind of whipping around. But the underlying trend is still above the T-line. Now Disney, we're watching. Make this smaller. Disney is right in this area. Breaks out through this level, you could see another move like this. Now, why would we suspect that? Because we know that prices move based upon investor sentiment. And if investor sentiment is consolidating for 3 months after a big move, people get ready for something new, which might start your next price move. And Apple, downgraded today. So this still puts you in a situation where even though it's a downgrade, they gapped it down below the T line, you close it out because it's not the bullish chart that you want. It doesn't matter what caused the selling, but investor sentiment was showing selling. Now, because of the nature of being a downgrade, not changing fundamentals or the overall trend or the overall nature of the market, this becomes a very simple supply and demand process. But if you see a downgrade, just kind of watch to see when all that supply from whoever's watching that analyst, or that, I guess it was Morgan Stanley, when that supply gets finished, then you start seeing it come back up into the normal trend. All right, so what you want to really concentrate on is the signals or patterns that are going to produce high probability results as well as high profit situations. AMCS, pretty obvious. There's your bobble breakout about ready to occur. So if you took the 50-day moving average out of here and it traded positive, you'd still have a J-hook. The fact that we can see it much more defined at the 50 makes it much more clear that that's where investor sentiment is coming into play. I don't know why. Oh, kind of a little bobble breakout, fry pan bottom breakout. Now, I usually don't recommend a $3 stock or point out a $3 stock, but it doesn't matter what price, whether this is a $3 stock or a $350 stock. The results are going to be the same because of human nature. Notice your best friend gap up. I'd be a buyer of this if you like buying that price stock. Party City. Coming to fry pan bottom, bobble breakout, getting ready to occur. So to buy on positive trading on this one tomorrow, just keep a high probability that you're heading in the right direction. Same scenario on Diamond Offshore. Little left-right combo, bobble breakout. Where do you think your next target is going to be? Right up here. That's a good 35% to the upside. I know the chat room was looking at Solly. The bigger the move, the more compelling there is a change of investor sentiment. Now, the intriguing thing about this stock was it was up 66% today. Still has the potential of being up 30, 40, 50% from this level. And PBR, your best friend, gap up, wave 1, wave 2, looking for wave 3. Where's your first target? Probably fill in the gap, which would at least put you in a profitable mode. ADVM, there's your slow curve breakout. This is that illustration of you always get a big move on a breakout situation, especially after a slow curve. The The prospects are pretty good. That's what's happening. I was going to use this one as an example of a J-hook pattern. Wave 1, wave 2, wave 3. That's ASUR. That terrible hand. There's your little J-hook pattern, fry pan bottom. That's got a high probability of going up here, giving you about a 60-70% upside. Bullish engulfing, and then a breakout through this resistance level. Something that you can look at to be buying on strength. Weight Watchers, another fry pan bottom type breakout, and this is your stick sandwich. Big up day, big down day, big up day. That's usually a very bullish signal. So if you're buying this one on anything above this level, it's telling you you've broken out going into wave 3. And Zixi, this looks like it has, look at all these spots here, broken out through that level. I'd be a buyer on strength on this one. KBH, also looking for it to break out through this level. A lot of people are asking about AMD. Not your best looking chart, but so many people are asking about it. You can be buying this one, especially on positive trading tomorrow, giving you a bullish doji sandwich, breaking out through that little J-hook area, coming after a left-right combo. Remember, a left-right combo is probably one of your strongest reversal signals. And if you get a doji sandwich following it, it's adding good confirmation after a strong reversal signal. Same scenario here. If this opens positive, doing a doji sandwich, pretty much breaking through this level, makes this your next target. That's Abercrombie Fitch. So here's your three white soldiers. Bullish day, opens lower, trades up. Opens lower, trades up. That's just a very strong signal. And then if you can also analyze that it's wave 1, wave 2, but if this trades positive, you've got wave 3. So that's about all I got. This is why you close out a signal or a trade when you see the sell signal. Look at our best friend signal on VC a while back. We held this, and then we became a little bit suspicious because it started showing some exuberance up here in the overbought area. When it gapped up and traded higher, there's two places that are logical stops. One was right here. Logic says if they gap it up and they come back down through this level, it's going to probably produce some sort of candlestick sell signal. Or if you didn't have time to do that, your final safety stop is where it closed the night before, because logic says if it comes down through that level, it's also producing some sort of sell signal. The bigger the signal, the more compelling there's been a change of investor sentiment, providing this one or providing an opportunity to go short on this one with it trading below the T-line. Okay, that's about all we got for tonight. There's still good trading out there, even though the market is slow. Still lots of good trade setups. And that's what I was putting in the afternoon comment today, that even when the market is lethargic, the advantage we have with simple scanning techniques for candlestick signals and patterns is that out of the 10,000 trading entities, you're going to easily find 3, 5, 7, 10, 12, 15, 20 good charts on any given day. So now it becomes just a process of figuring out which ones of those good charts are the best ones of those charts, which always puts you in situations where your money is sitting in areas where the probabilities of being in the right trade at the right time and a good profitable trade at the right time is greatly in your favor. All right, so with that, is there any general questions on candlesticks? If not, Jim, go ahead and do the double line. And in 3.6 seconds, do the next double line. Delta was still in an uptrend. I wouldn't buy it here, but if I was long, I'd stay long, but I'd calculate wave 1 and wave 3 are getting pretty close to being the same. HAE. See the J-hook pattern set up. You stay long as this stays above the T-line. But notice you're at the end of a flat trading with a doji, which makes it very simple. They're probably going to move it in the direction of how they open it after the doji tomorrow. Line, you stay long as this stays above the T-line. You can see the support level. You're not quite in the overbought area. You stay long on this one. ILMN, I would use today's low as a stop. If it came back down to that level, they're selling it off or coming back to the T-line. BlackRock, same scenario. If they open this one lower, notice where they open this. Below the open of the previous day. So the only way to stay in this would be to see it open positive and trade positive. Labu, kind of soggy. Right now, you shouldn't be in it. I wouldn't be in this long or short. Just not give us any great direction at this point. Willow. Where are all these lines? I would suspect it's coming back up to the top of the trend channel. Match. Nothing. You can see that you're in a wedge formation. I wouldn't be long or short right now until they break out either this direction or this direction. Because you're just kind of wasting time and you still don't have any idea or won't have any idea which way they're planning to take it until they get to the edge of that support or resistance level. EXTR. This one has to open positive and trade positive. If it starts trading lower, pretty much told you all this indecision right here at the 200 tells you they're not going through the 200. And ADT has to open positive tomorrow also. If it opens lower, getting you back into this trend or below the T-line, you're back in the sideways mode. Micron, looking for a J-hook pattern setup, meaning you can buy this one on positive trade tomorrow. I think we did ADM breakout, look for a 45 degree. XLNX, we're staying long on this. It closed back up. Now we're watching to see if they can bring it back up through the T-line, taking you to the top of the trend channel. I would probably put a sell stop at today's open. You don't want to see this sell off again. RV NC needs to open positive and trade positive tomorrow to continue the classic fry pan bottom J hook pattern. On Ed, still not a very vibrant chart. The only reason you should be holding this apparently is for the dividend. 20-year notes. If you're short, you can stay short. It's just not very good as far as trading because of it's trading so slowly as far as percentage move. This one, if you're long, you didn't get out today, it has to trade positive tomorrow. If it starts trading lower, close it out. Tells you the bulls couldn't bring it back up. ZS, just stay long. The SOX has to open positive and trade positive tomorrow to stay long. Oops. JB, that's a lap. ENCH. You just stay long as it stays above the T line. Broke out through that level. Whoops. ELTK, nothing. I wouldn't be long or short. No direction. Kenneth, they are the same. Hammer is in the oversold condition at the bottom of a trend. A hanging man is the same formation, but it's at the top of a trend. I'll see if I can find some as we're going through. If this opens positive, you're still in an uptrend. Use the T line. Yeah, it's got a doji sandwich setup. Do you have any videos or do you plan to have a webinar about how to find stocks to trade? Jules, yes, we're going to be doing a scanning session here probably within the next week. Been getting a lot of requests for that one. SP, the more you look at the charts and you understand the signals, the more your eyes will all of a sudden get accustomed to seeing exactly what's happening. This one, if you're ready to go short, it came back down through that level, you've got a wave 1, wave 2, wave 3. If you're long, you definitely should not be long anymore. Oh, yes, spot short. Didn't read far enough. And port, same scenario. There's your bearish left-right combo. Right smack dab down to the 50. I'd be ready to go short on this one. Ocular. Is that a hanging man? No. Remember, you probably want to see your stochastics rolling over. This just tells you wave 1, wave 2, wave 3 with consolidation. Now, if the stochastics were up here rolling over, and now you might consider it a hanging man. Did a huge BFG. BF, best friend. Best friend. Yes, when it rolled over, it was kind of telling you it's like coming back to test the T line. So SP, this isn't anything spectacular as far as reading the charts. Once you see it and understand what's happening and see the signals and where the stochastics are, it becomes very simple. And this is why I keep pushing people to keep studying their signals and patterns, because once you, yes, we're going to be doing the entry exit, but that's all going to be combined, John, with scanning and then cultivating those scans to see what would be required. So if I was looking at Roku right here, stochastics coming up, left, right, combo, doji sandwich. What do I need for confirmation? I want to see that they're still buying. I expect buying because of the signal. But what I don't want to see the next day, they open it down here. That's not good confirmation that the bulls are taking control. Kind of the same scenario on our QD. Your entry strategy was, if this was a bullish doji sandwich closing up above the T line, what do we want to see the next day? We want to see more buying. What was the other one? If this is a nice fry pan bottom breakout, what do we need to see? Bullish confirmation. We don't want to see it open here and start trading off. That's not confirming our pattern. So that keeps us out of a bad trade. This is why I always want to see confirmation. We always get the question, well, what if they open it positive and then reverse it? Well, probably for every time you see that type of situation, you're going to see 10 times where when they opened it positive, they took it positive. The blue and red really don't matter because we're not trading stochastics. We're using stochastics to see where are we in a trend. Are we overbought or oversold? Some people say, well, should we trade the stochastics when they cross? If you do that, you're usually about 2 or 3 days late based upon what the signals demonstrated. Okay, so we're probably in the summer doldrums, but fortunately, we can still, yeah, and I don't know why I don't have the 34. I keep forgetting to put it on. The 34 is relevant. Relevant in the sense that it just kind of confirms levels where they will stop a pullback or show a resistance. I'll try to remember to put it back on here. Okay, everybody. Have a good evening. I know you're all watching, waiting for Josh Bell at the Home Run Derby. I know he's your favorite. So with that, everybody have a good evening. We will see you bright and early tomorrow morning. We'll see you then.